our U.S. update last week, we told you about how rent growth levels are reaccelerating in some key development markets, and today we'll highlight one of those for you, the Bay Area of California. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Bay Area update. Construction volumes are at 20-year highs in the Bay Area, with most of that concentrated in the San Francisco and San Jose metros, and much less of it on the Oakland side. So we thought Oakland was best positioned to take the #1 spot nationally for rent growth, and that's exactly what happened. But we did not expect to happen is to see rent growth levels accelerate in all three spots. Now take a look at this chart here, and what you see is that Oakland is indeed the leader locally and nationally. And in fact, rent growth in Oakland hit a peak for this cycle at 9.1% year over year through Q1. But what we had seen previously was lost momentum in the other two spots, San Jose and San Francisco, as construction ramped up, but not anymore. Rent growth in San Jose and San Francisco hit as low as 5 to 6% in the first half of 2013, but as of Q1 2014, annual rent growth measured 8.7% in San Jose and 8.1% in San Francisco. And for both of those markets, those are the best numbers in nearly 2 years. So there's been a lot of talk about why rent growth levels should dampen and were dampening in the Bay Area. Affordability, possible talk of government intervention, specifically rent controls. But the biggest factor has been apartment construction. And indeed, the initial slowdown that we saw in rent growth levels was directly correlated to the pickup in apartment development. But what's happened here and in other hot development markets across the West Coast, in Colorado and in Texas and in a couple markets on the East Coast, is that we've seen strong demand for the new units that have been completed thus far, and that has given apartment operators the confidence to continue to push rents, or actually to push rents a little more than they thought they could. So let's take a look at those numbers. Remarkably little acceleration in construction in Oakland, which is why that one looks primed to remain #1 nationally for rent growth over the next year or two. It's really the only market with big rent growth and little construction nationally, with the possible exception of Portland to a lesser degree. And in San Jose and San Francisco, construction has surged to long-term highs, both above 7,000 units underway. And the vast majority of the construction continues to take place in just two submarkets, the Soma neighborhood in San Francisco, with 4,429 units underway on top of more than 1,200 units that just completed in the last 12 months, and North San Jose Milpitas, with 3,206 units being built on top of the more than 1,400 units that just completed. And also elevated construction levels in central San Jose, the Oakland-Berkeley area, and South San Mateo County, but to much lesser degrees. Occupancy, by the way, remains tight in all of these spots. These are obviously markets where affordability is a major roadblock to home ownership, and the traditional high barriers to entry has made apartment development limited over the past 20 years, so occupancy rates are almost always high. But the real question is rent growth. Is the reacceleration that we've seen in rent growth a sign of things to come? Our view is that maybe, but remember that we've only seen the first wave of this construction cycle start to hit and start to complete. And so as we see the supply levels peak later in 2014 and in 2015, we think rent growth levels will indeed come back down, but not dramatically. We think rent growth will come in right around 6% for the Bay Area overall, but Oakland should remain the national leader since construction is so much less of a factor there. And that wraps it up for the Bay Area. So until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.